So I'll just take a step back and kind of talk about any workforce ecosystem that we talk about. I think there are three credentials, three important things that define workplaces. The first is what do you do, who are you doing it for, and how are you doing it. So everything in terms of what you apply as a semantic on running that business is a factor of these three things. Now let me come to the bank. Banking is nothing but a trust business. It runs on trust.
Surely, 100% agree.
And in the last maybe 5 years, 6 years, there's a huge shift in terms of the traditional banking or legacy banking, like we call it, and the banking that I saw on the screen some time back, which is online banking. I'm sure all of you sitting here would have come across this concept called neobank. So every day some or the other thing is coming in, as part of the banking ecosystem. And see, earlier banking was a straitjacket process. You're taking money from somebody and giving money, okay, and then whatever you get in between is what the bank earns as a revenue. That's the business model. But today that ecosystem is changing because it's not the way it is. You have multiple partners. Banks never thought about co-lending partners earlier. Today you have co-lending partners, you have online systems which are like being your acquisition channels. Earlier we used to hire hundreds and hundreds of acquisition folks who would go out in the market, make a contact with a customer, make a sale, and that's how the bank would earn revenue. But today that's not the scene. For a lot of times you're not even seeing that end customer because the customer is actually sourced by somebody else. And because you are in a trust business, now you see what really is happening in terms of communication, in terms of emphasizing what you would really do to go to that last mile. And that requires a lot of optimization from a technology standpoint, from a process standpoint, etc. So as a bank, and almost all banks, I'm sure you would have heard about this, that the COVID phase, banks were on a digital spree. Most banks you would have seen, most retail banks were on a kind of a online spree and a digital spree.
Sometimes it appeared that branch banking will actually going to dissipate and will totally wither off. I don't know what is the current status. You might tell me, you can give me a shock by telling branch banking will be removed. I don't know.
So just see any of the annual reports published of any of the banks, the year has ended. You see the number of branches that banks had last year, compare it with the branches that they have had this year. Just make a comparison and you would get your answer. It's not reducing, it's increasing. In fact, as far as our bank is concerned, we moved from we had about 350, 400 odd branches end of last year, and this year we have added about 100 odd branches.
It's surprising because today each and everything, starting from opening an account till purchasing a national pension scheme, everything is available through an app. So why we require to visit the branch?
It's an interesting concept. In fact, there was a presentation I was making for my president to speak at ETHR. And one of the points that we came across, this is a published research, which talks about, these UPI systems, that the GPay and all of them have come. But what is very interesting is to note what is the quantum of transactions that are being transacted through these online mechanisms, and which itself means that money at the end of the day, if you have to give to another person, it's a trust-based thing. And a lot of people over a certain amount definitely want to go to a certain legacy system, and that holds true for check also. Checks are not out of business. I mean, you still have checks, which is a legal tender. You go in any part of the country, they still you still provide a check, obviously because it has legal aspects, etc. So I think building of any ecosystem from a workforce standpoint, like I said, is based on these three aspects. If you understand what are you doing, who are your customers that you are doing it for, and how do you want to do it, is a key enabler. So for some company like a neobank, it would not matter. It wouldn't matter if I'm seeing him, I'm getting money from him. Doesn't matter, he doesn't really matter. But it all depends on what you're doing and how you're doing. So the larger the ticket size becomes, the larger you will have to put human trust, and a human touch point has to be there. It cannot be moved. See, the COVID time was called as the great resignation time. And, as a bank, we were also hit by a similar kind of a situation. So what we did, anyways, we were building our analytics team at that point of time, as all other banks were doing. I was just saying a while before. So we have put together a kind of a predictor, and this we have picked up from a business. Like when you do credit and when you sell loans, you do something called as a credit monitoring system, or what we call as early warning signal. And you kind of trace the loans and see the propensity of when it could actually fail. So what we have tried to do is do that same model, apply that same model using an analytics platform to find out those parameters or levers for a person to leave, and then bake it into a technology. And so the front end of it looks like a simple questionnaire that goes to an employee. So an employee fills like 10 questions, and at the end of the day we would be able to say that what is the percentage of turnaround intention for that particular person, for that particular individual. So that's what we have introduced. It's been running for about 6 to 8 months. It is fairly reliable, I must say, that we have been able to do some great saves as a part of what data we have been receiving. And the best part of it is, as we seek more and more data inputs, we are refreshing our own model to try and make it sharper and sharper and sharper, to ensure that there are no false alarms, or try to reduce the amount of false alarms we would get and increase the reliability. So this is something that we have done at this point in time, and it's working quite well for us. What can we do to inculcate the principles of customer service? We came up with a service philosophy, and again I will draw from what she's mentioned in terms of acronyms. So our acronym is E, S and Q, and the first word E stands for empathy, which is what Ankur was talking about, because the entire relationship is based on, can you empathize with the individual who wants to partner with you? Empathy, speed and quality. So that's the three acronym that we talk about, and it becomes very easy in our training program. So we do not have a very big laid out customer philosophy statement. People have to ratify it and go and speak to a customer. No, there's something, it's extremely simple, and the behavioral traits that align to empathy, speed and quality are also very clearly defined. Okay, so you clearly know in terms of what those stand for and what each of our employees have to display. And like Debashish was talking about, we run something called as ESQ stories. So every time that we come across a heartening scenario or a situation that a customer shares with us as part of our service cell, we kind of publish those stories in the organization. So that's how we inculcate the service philosophy per se, and that's our USP. I've been a recruiter all my life, you can see through my profile, and I look at three things whether I'm going on a campus and hiring a complete fresher, or I'm looking at a CXO level hire and doing some interview there. I look at integrity, learning agility and resilience. These are three things I think that define an individual, and if an individual has these, I feel that the ability for the person to cope up with a situation, take fallbacks, come back strong, have empathy and humility and things that he mentioned about would all be there. So three things: integrity, not negotiable at all. We have seen enough of people having entrepreneurial mindset. At the end of the day, nothing happens unless you have integrity. See, if technologies or AI or ML that you are referring to here could actually take away jobs, then technology companies should be the first ones who should decide to say that they should have no employees, basically, because they have a technology. Okay, so that technology should augment people working in that institution first. They would first try to reduce their fixed cost before moving and giving that service to another individual, right? So that doesn't happen. We don't see that. Right, so like he rightly mentioned, it's a service that is augmented by technology. And the second thing is, it's an in-thing in the HR ecosystem. If you ask HR people, they will really tell you in spite of or despite implementing the best of HRMS tools available in the market today, you still hire more people in technology to manage those HRMS systems. So which itself means that there is no, I mean, it's not reduction, it's basically addition of workforce in that sense. There is a recipe for success. Okay, and the idea is as you get experienced across multiple organizations, you understand those aspects of what the organization stands for, what's the fabric of the organization. You start understanding what's important, what is not, etc. So you maneuver yourself accordingly, which is a culmination of your experiences, and which is why Raj rightly mentioned that once you pass out of an MBA school, you are not put as a general manager for an organization, okay? And that decision, that is not done because even if you are qualified from the best of best institutes, they put you on a management trainee program. What are they trying to do there? They're trying to actually get you aligned to what's the fabric of the organization, to understand what are the brick and mortar aspects required for running that organization before they actually place you onto some place where you're making decision for a wide group of people. It's not easy. It's very easy to sit in a air-conditioned room and then say that, I'm making a decision for X amount of people, but it's far more difficult to really get down and understand how does your decision impact the last mile, because, either business is happening at that last mile or it's not happening based on what decision you are making here, sitting here. So that connect is extremely important. And I think there are a lot of foreign universities which basically are looking at combination of skills today, like you have economists who are also doing something in biology. So you have a science professional who has a dual degree in economics or econometrics in that sense, So there are culmination of those fields, etc., which are coming into place. And over a period of time, I think the corporate world will also align to some kind of a curriculum like that, maybe over a period of time. Apple has moved to M1 now. They have given up Intel chips. But if you realize, they actually started this program quite some time back. They started hiring Intel people much before. Okay, and why they hired folks from Intel was to train their internal employees and reskill them for them to be able to make those processor chips. Okay, it's not a one-day decision that they made of moving directly out of association like Intel and then say that we have an M1 M2 processor that they built in-house. So it's a program that you build. So it all runs through the strategy. And what you mentioned is what's the success measure? The success measure is whether you can deploy that particular reskill employee, and whether you can align to the organization's goals. And in Apple's case, they were successful, and most of the organizations that are doing some kind of reskilling measures, they all measure in terms of what's the mobility or talent mobility that happens at the end of the reskilling exercise.